Greetings, Dwayne, CFRN. Today is Veterans Day, 11th day of November 2015. Time now 11:11 p.m. Eastern. It's 11:11 on 11:11. What's that thing they say about when you look at the clock and it says 111? It's the universe speaking to you, trying to get your attention. Wow, you got my attention. Okay, moving right along. Let's do a recap of the Concierge trade alerts for today. Now, of course, the trade alerts for today went out when? Last night. They got out late. Why? There was a hitch in the giddy up on the server. Tuesday night. It says 8:15 p.m. Eastern. I hit send. They hung up a little bit. Didn't really affect the outcome of any of the trades because the trades transpired considerably later, but just want to make sure you're aware. If you look at the timestamp on your email, it's going to show a couple hours later than that, but again, that didn't affect the outcome of any of the trades. So with that said, let's move on. Now, I do a recap every day on the radio program, but because of the way we formatted the program, I typically get a chance to do 2 or 3 markets before David comes on. Then once we finish talking with David, then I complete the recap of the Concierge trade alerts. So it's kind of broken up. And that's why I do a second video for those of you who maybe aren't able to tune into the radio show and you don't want to have to weed through the entire show to find the recap. I'm just doing my best to give it to you each day in one short video. Now, I want to address after the fact, okay? We never give after the fact. What we give is before the fact. I just want to make sure you understand that. These alerts went out last night. So when I go through and I show you what triggered, see, this is a huge difference. I heard something today that kind of just made me chuckle. We take this very seriously, all right? And so when we send you an alert, we don't talk about a neighborhood or an area or nibbling. We give you the exact price to the tick. We give you a hard stop to the tick. We give you a hard target to the tick. We also give you the flexibility of trailing your profit target, your profit stop, if you so desire. So there's some flexibility, but there's nothing nebulous, nothing ambiguous about what we do. Okay? Just want to make sure you are crystal clear on that. Now, it's been an incredibly interesting week for me, not because of the markets, but because of the people I've talked to. I've had 3 mentoring sessions this week with men who used to be brokers. In fact, they were brokers for many years. I've talked to you about 2 of them. Had the privilege of speaking with another one today. He even gave me his broker ID number. I didn't ask for it. He just kind of spit it out. He said, in case you think I'm pulling your leg, here's my number. And by golly, he was telling me the truth. The real deal. He, again, I will never use names because I respect your right to privacy, and that's something that we promise everyone up front. There'll always be discretion, okay? But as a broker, he worked with a lot of farmers and helped them hedge with their crops. So what we do in the live trading room is kind of new to him. Although he spent many, many years as a broker, it's a different kind of trading. What he's really in love with is what we do in the live trading room, and additionally, what he's already taking advantage of are the Concierge trade alerts. Now, as you know, with the 2420 blueprint, you only have to risk 8 ticks. Sometimes, because you only risk 8 ticks, you'll get stopped out. That's just the truth about trading. That's the truth about any kind of trading. If someone tells you they have a way that you can trade and never get stopped out, well, they're either pulling your leg or they don't use stops, and soon they'll be out of business. So you'll no longer enjoy that relationship that you have with them because they'll be gone. There is no way around getting stopped out. The best trader on the best day, the trader who has developed whatever method to create the highest probability trade possible, is going to be profitable 7 out of 10 trades on a good day. Those are just the cold, hard facts of this business. We make no bones about that. Beans, bones, whatever you want. That's the truth about trading. I wrote the article the other night. You could go to the blog and read it. The truth about Emini trading. If you Google the truth about trading and hard stops, I think it'll pop right to the top. So the gentleman who worked with the farmers, who helped them hedge for their crops so they would be able to earn the most money for their crops. So now that's something I don't know how to do. While he has come to us to learn what we do in the live trading room and to learn what we do with the alerts, you know, if we were talking about helping farmers, and I would go to him. See, don't be afraid to seek out in all areas of life a specialist. Like if I'm driving an expensive automobile, which at the moment I'm not. I've driven expensive automobiles. At the moment I'm happy with my little Volkswagen, is it a Jetta? I think it is. And my daddy van, my soccer van, it meets the need. May I drive a luxury car again someday? Maybe. Maybe not. There was a period in my life where that was really important. I remember when I got my first Mercedes. Oh my goodness. I had arrived. You know, the feeling only lasted about 3 days, not even a week. I mean, I had worked hard building up to the day I could walk into the showroom and buy that car. And I couldn't believe how quickly, how fleeting the whole thing was. But anyway, the gentleman who spent time helping the farmers, he understands using a larger stop to obtain a larger gain. As you've seen over the last few months, year, whatever the case, we've had many $1,000 per contract days in crude oil, in bonds, in the euro. He understands how to use a larger stop to go after the larger gains. So he called me today really just to kind of say thanks and that he was appreciative. And I just had a tremendous time talking with him. And so if you're listening to this recap, I just want you to know I appreciate your call today. I really do. And I look forward to talking with you again in the near future. And anytime I can be of service and be of help, you've got my number, you call me, okay? All right, let's get down to business. We said to consider being long above 2084. Now, these are still last week's weekly trading zones. This week's zones are not revealed to the public until Thursday. Partners, on the other hand, and concierge clients get the zones Monday morning, 6:15 a.m. Eastern, before Wall Street wakes up. So the first trigger today would have been a stop out if you were using an 8-tick hard stop. The second trigger delivered 3 points. Then we triggered on the short side. The first time around was good for 2.5 points. Second time around, there was a little bit more. The swing low was 20.68. So from 72 to 68, that would be 4. So we start out with a minus 2 points, and then the market makes 3 points available, and then the market makes 2.5 points available, and then the market makes 4 points available. Kind of a quiet day, but again, today was a holiday, Veterans Day. Markets were open, bonds closed early. Other than that, this was the day. No complaints. Any day that the S&P presents us with this kind of an opportunity, I'm happy to get up and go to work. Okay, next on the agenda, let's look at the Dow. Long above 760, short below 630. There we go. Okay. Long above 760. 760 to 99. 799. It's 39 points. The Dow pays $5 per point. If you're trading the 2420 blueprint and your goal is to make $100 per contract per day, you need 20 points. Now this initial move here, okay, this went from 60 up to 70. Is that correct? Yes. So 10-point move. The second move, 39. Now, what about the short side? We said to be short below 630. That's down here. No trigger on the short side today. So a 10-point move followed by a 39-point move. Now, I dare say no one took 39 points out of the Dow. It's possible. Chances are, if you're trailing your stop on whatever the remainder of your position might be, as price begin to retrace during this hour. What happened? You got stopped out with profit. And that's a very good thing. Next, the Russell. Now, I mentioned this on the radio show today. The Russell is on the top of the leaderboard. It's a term I picked up from sitting with my wife as she watches one of her favorite shows, Dancing with the Stars. Now that's 30 years of a loving marriage when a man will sit with his wife, hold her hand, and watch Dancing with the Stars. One of the dancers, one of the stars, is one of the guys from the train in France that took down that terrorist. Yeah, he's on there. Very nice young man. So on the Russell, top of the leaderboard for the one trade a day, top of the leaderboard for the Concierge trade alerts, and, well, today was no slouch either. So, long above 89, short below 82. Let's just see what the Russell did for us today. First trigger, 1189. We make a run up to 1191. Okay? So that would be 2 points. That's $200 per contract. The S&P 500 pays $50 per point. The Russell pays $100 per point. So this initial move, we got up to a swing high of 91, 2 points. Important prices, important areas are almost always tested. So price comes back and puts in a swing low at 1188, 1 tick below the trigger. That's all you need, and off you go again. This time, the swing high is 1191.70. So this was 91. This was 91.70. So this was 20 ticks. This was 27 ticks. Or the potential for $270 per contract. In this move, the hour that triggered right here, now let's go with this one, because this was 3 a.m. in the morning. Now, I talked about volume a little bit today. Markets like the euro gold, crude, the S&P. Most of us ordinary folks who trade 10 and 20 contracts, we don't have to worry about volume around the clock even until we move into markets like the Russell. Now, if we're going to trade 3 a.m. Eastern, London Open, on the Russell, volume does become a question. Now, let's take a look and see what happened here. In this hour, there were 362 contracts traded. Could you hide your 10 or 20 in there? Yes. In this hour, the second trigger, what do we have? Can I get it? Is there enough there to get a reading on? Of course there is. 180. Okay. And the next hour, 174. Next hour, 432. Okay. Now, as the day progresses and Wall Street wakes up, again, S&P, gold, crude, euro, man, those things just trade like crazy around the clock. But the Russell, if you're going to come at the market with more than 10 or 20 contracts, you need to wait for Wall Street to wake up. Now, Wall Street's wide awake here. In this hour, we trade 12,000 contracts. 12,716 to be exact. So could you hide your 10 or 20 in that? Yeah. Now, on the first move down, the market dropped to 1177.60. So let's call it 78 to 82. That would be 4. That's 44 ticks. Okay? 44. All right. Important prices, important areas, almost always tested. So we get another opportunity. This time in the hour that we trigger, 9,670 contracts. Plenty of room for you and I to get our 10 or 20 in there. The swing low was 75.90, so if we make that 76, that's going to be 61. That's 61 ticks times $10 per tick. That would be $610 per contract if you knew how to get out at the exact swing low. But if you're like an ordinary person, you're going to get stopped out when it pulls back here, or even more so when it pulls back here. Now, what was the total amount the market made available? Well, the swing low of the day was 74.10. All right? So from 82 down to 74, that would be 8 points or $800 per contract. But again, just being reasonable here, you know where you're going to enter because we've sent you the email. It's carved in stone. It's not nebulous. It's not ambiguous. It says short below 82. Now, what does short below 82 mean? It means 1181.90. To get short below 82, you got to go one tick below 1181.90. 1181.90. Nothing ambiguous, nothing nebulous. If you're trading the 2420 blueprint, there's an 8-tick hard stop. If you're trading the 2420 blueprint, your goal is $100 per contract per day. Can you trail your target stop on the balance? Yes, absolutely you can. If you're going for larger game, bigger trades, mo money as they call it, where would you put your stop? Right there. About there. Yeah, it's about right. Just above the previous swing high. That's what my buddy, the man who helps farmers, who used to, this is how he's trading the alerts. So see, someone like him actually has an opportunity at this because he is using the larger stop. Now, did you need a larger stop here? I mean, look at how cleanly this thing traded. Go take a look at your own chart. See what you could do. But if you're working the blueprint, don't go jump into this, please. One step at a time, one tick at a time, one day at a time. Build your confidence, build your account, mature as a trader. Mentally, psychologically, you grow as your account grows. And as your account grows, you grow. Together, after 24 months, you're both all grown up and ready to step out into the world and trade 20 contracts. Now, if you can make $100 a day and you've earned the right to trade 20 contracts, according to our president, you are one of the wealthiest Americans times 2. When you hit the 1 year mark and you're trading 10 contracts, that makes you one of the wealthiest Americans. At 20 contracts, you're one of the wealthiest Americans times 2. Now that's before commissions. You got to, pay your commissions. There's always a cost to doing business. Commissions is not the largest cost of business or largest cost of doing business in this industry. The largest cost, the largest expense that we have are the trades that get stopped out. Okay? From 82 all the way to the swing low, 74.20. So that's 78 ticks, $780 per contract. At 10 contracts, you can do the math. I don't have to. I also want you to know that trading is risky. You can lose all of your money and then some. Trading is not suitable for all people. You really should consult with a licensed investment professional before making any investment decision. That's just good advice. If this is what you're going to do for a living, okay, this is how you want to pay your mortgage, send the kids to college, and do all those other things, then the method in which you're going to do it, you need to be able to drag it out in the light of day. It needs to be able to bear the light of day. There best be no skeletons in that methodology's closet. It better be crystal clean. Okay? Let's make one thing perfectly clear. Our trading methodology. Nothing shrouded in darkness. Okay? It is what it is. Now, every morning you see Michael trade in real time in front of real people. We've been doing this for, we're in our second decade of helping traders learn how to trade. For the past 3 years, we've used the exact same trade setups, just two, same indicators. We've got a spreadsheet. You can go back, and if you want to know what we traded on March 7th, 2013, guess what? We can tell you what we traded, how many contracts we traded, what markets we traded, what the end results for the day were. We can tell you how many trades it took us to get to our daily goal of $100 per contract per day, what markets we were in. We keep all of that data, not to brag, not to boast, but so that you understand that it's not a dream, not a whimsy, not a fancy. It can be reality if you're willing to buckle down and go to work. Trading's not easy, but it can be simple. So simple that 9 out of 10 people can't do it. Why? Because the human mind wants to complicate it. I mean, what is complicated about buying 1189.1? Nothing. So why do people struggle with that? Human nature. What is difficult about selling 1181.90? Nothing. Except our nature that makes it, oh, well, there's got to be more to it than that. No, there doesn't have to be more to it than that. We want confirmation. We want assurance. We want to know that it's proper and we're not going to get stopped out. Guess what? You're never going to have that guarantee. Now, Paul once said, because there's grace, does that mean we should just, sin even more? No. And because we're going to get stopped out anyway, should we just trade anything that moves? No. We have a very strict set of rules or criteria that must be met. Well, actually, our list is pretty short. We got a short list. If you're in the live trading room with Michael, the slingshot trade, which is my favorite, my signature trade, these are the ingredients that never change. And when I say they never change, they never change. Not on a Tuesday, not when the bus driver is wearing a yellow shirt, not when it's raining. They never change. And your mind right now is going, except, but, and I'm shaking my head going, never. Bullish cross. Price pulls away. Price pulls back to physically touch the BBC. Up close. By the open of the next candle. Risk 8 ticks on the trade. Once you have 4 ticks profit in the trade, you move your stop to break even. 5 ticks profit in the trade. Lock in a tick to cover your commissions. Trail your stop as tightly as you are comfortable, locking in as much profit as you can until the market comes back and stops you out with whatever profit you've accumulated at that point. If it's not enough to meet your daily goal, then you get ready for the next trade. When you sit down at your desk each day or stand before your trading platform, however you do it, you don't know on any given day how many trades it's going to take to reach your daily goal. Some days, it'll be 1. Some days it'll be 5. Some days it'll be 10. And some days it'll be more than 10. That's why we have carryover trades. You get a lot of 10 trades every day. If you nail it in one today, beautiful. The 9 you don't use roll over to tomorrow. So you have 19 when you come in and sit down tomorrow. Well, gee, do I really need 19 trades to make $100? Well, hopefully not, but it's nice to know you got them if you do need them. You see, the blueprint assumes that you're all as mediocre as I am. That's right, I said that out loud. I am a mediocre trader. Not the best, the brightest, or the, well, best looking. No, I'm not. But it's kind of you to say so. No, I'm teasing. I'm okay with being mediocre. And I don't stress out over the fact that I'm mediocre. Because I know how to think in probabilities, and because I understand the discipline that's required, it's okay to be mediocre. I mean, I've got 10 trades every day to make $100. And if I do that, I can graduate in 24 months as a 20-contract trader. That's pretty sweet. I just got to follow the rules. I just got to think in probabilities and exercise discipline. If I do that, the world is mine. Trading's not easy, but it can be simple. So where are you on the journey? Have you started? Have you made some mistakes? Have you blown up an account? Don't let the past define your future. Tomorrow is a new dawn. It's a new day. If you've been on the trial with us and you want to become a partner and be in the partners meeting tomorrow night, we'd love to have you. If you've not yet taken the trial, take the trial. If you're struggling, continuing to do the same thing that you're doing now will continue to get you the same results. Hope all you want that you're going to get different results by doing the same thing. Einstein, pretty smart guy, says that can't happen. In fact, he called it insanity. I won't be so brutal. I'll just say, if whatever you're doing is not giving you the results that you're looking for, try something that perhaps can. Like this. Let us show you what we do. Now, it would be one thing if we just let you watch us do it. Hey, come watch what we do. We're pretty cool, right? But we take it to the next level. You can download a demo of the Ninja Trader platform. You can download a demo of the DT Pro platform. We will turn on the indicators for you in those platforms for a full week so that you don't just have to take our word for it. You don't have to just believe what you see on our screens. You can actually get in the demo. Both of those platforms offer you a demo, a simulator, real data, real time. You can go in and put on and take off trades using our methodology and our indicators for a full week. So at the end of the week, when it's time to make a decision as to whether or not you want to be a part of what we do and enter our mentoring program, you already know if it's something you're going to be able to learn how to do because you've been doing it for the past week. We did a lot of thinking and a lot of head scratching years ago about how we could be as fair, open, and transparent as possible. And this is what we've come up with. If you have any ideas on how we could be more transparent, more open, I'd love to hear it. I really would. Hopefully, we never become too old or too full of ourselves to listen to suggestions or reason. Okay? All right, what's next? We did the Russell. Let's get through this. Russell. The next is crude oil. We said last night to be long above 44.10, short below 43.50. Now, when I put that alert out, did I have a pretty good idea where crude was going? I thought I did. Most traders almost always have a pretty good idea where they think the market's going to go. It's called a bias. And your bias can come back to bite you. So that's why I set my bias aside when I do the trade alerts, whether it's the Concierge trade alerts at night or the one trade a day in the morning. Now I'll be honest, the direction that I think the market's going, I do that one first. Why? Well, it just feels right. But then I spin my ball cap around. I point the brim backwards. And the direction that I don't think it's going to go, I do the same work, I apply the same logic, I run the same math, and I give you the very best possible entry I can for the direction that I don't think it's going to go. Some days I'm right, although we don't use the term right and wrong, because that's not relative to what we do. In other words, some days the market does go in the direction that I thought it was going to go. Some days it doesn't, but that's okay. I've protected you no matter which direction it goes. Some days it goes in both directions. That makes for some fun days. Because if you've graduated and you've moved beyond the blueprint, you can trade both sides. True story. Now, 43.50, the first move down, made it all the way to 43.43. That's 7 ticks. But of course, we're going to get short one tick below 43.50. 43.49. Why? Because that's below 43.50. It's always one tick below, one tick above. So actually, that's 6 ticks. Okay? At 4 ticks, if you're trading the blueprint, you move your stop to break even. So what happens? You get stopped out of break even. Boy, worse things could happen, right? Now on the second trigger, not only do we have some follow through, but look at the volume on this thing. On the second trigger, 57,000 contracts. I'll say it again just because it sounded good. 57,000 contracts in this hour. And in this hour, we hit a low of 43.05. So that's 45 ticks or $450 per contract. Now, if you're like my buddy, my new friend, who used to help the farmers, and you know how to trail your stop and stay with this thing, and you're using, deeper stops, well, this thing dropped all the way to 42.62. Now, let's do some fast math. 43.50. 43.50 minus 42.62 equals 88 ticks. When I put this number up earlier today, the market had not finished declining. So, 88 ticks times $10 per tick, $880 per contract. But even my new friend, who used to help the farmers, I doubt even he knows how to get out at the exact swing low. And he'd probably be the first to tell you. But I bet he knows how to trail a stop and get stopped out here, or here, or here, or maybe even here. Either way, it was an awesome day in crude oil. Oh, what about the long side? So glad you asked. We said to be long above 44.10. What's the swing high? 44.11. We got to bump it up one tick to 44.11. But if you're selling 44.11 on a stop, guess what? The second you touch 44.11, filled. That's the truth about trading. Nothing to be ashamed of, nothing to be afraid of. Certainly nothing to hide from. Embrace the stop out. The 8-tick hard stop is the cheapest insurance you'll ever purchase. The premium will not only save your bacon, it'll save your business. Use it. Don't ever convince yourself that there's a good reason to increase the stop once you get in a trade. Okay? I promise you. Now, whether you're using market dynamics or the 8-tick hard stop, once you enter the trade, there is nothing that can happen that would justify increasing the amount of the stop, except your own vain imaginations. It's only going to cost you money. Don't get into that bad habit, okay? Next is the euro. Boy, the euro's been quiet. We said be long above 108.05 or short below 107.15. Now this line here, that has to do with the one trade a day, so let's get that out of the way. All right. 108.05, no trigger. Short below 107.15. What time did that happen? Today's the 11th. 107. Hang on. 15. 107. 15. This is a stop out. This is ugly. Ugly, ugly, ugly. I'm glad I just talked to you about stops and the importance thereof. Now, I could have glossed right over this. I could have just jumped to the next chart. You'd have probably never caught it. I have to live with myself. People say, how do you sleep at night? On my side? No. I'm going to show you these because, again, there's nothing to be embarrassed of or ashamed of. I mean, it's part of the business. The best trader on the best day is profitable 7 out of 10 trades. The honest best trader on the best day is profitable 7 out of 10 trades. So here we get a drop to 107.10. So that's a 4-tick drop, right? Because we're at 107.15, and we got to bump that down a tick, right? So 4 ticks, stop to break even. No harm, no foul. This one, on the other hand, dropped to 107.11. And so that's only a 3-tick move. So that actually does become an 8-tick hard stop. True story. Soybeans, there was no trigger. We had said to be long above 66 or short below 54. And it didn't happen. That happens. We have a trade in the dollar. It's coming together nicely. We've been talking about it now for a few days. We want to see the dollar. This is a daily chart, okay? I'm always showing you hourly charts. Lately, I've been showing you 30-minute charts because of the one trade a day. On the daily chart of the dollar, we're waiting for price to pull back into this support area. Doesn't have to pull back to a certain specific number. I just want to see it touch, penetrate this gray box. Once it does that, then as it begins to rally, if it begins to rally, and I think it's going to, why? Leg, retrace, leg, retrace. I'm just looking for one more leg, that's all. No, nothing secret. No trade secret, none of that. Patent not pending. Just a trade, okay? That's what the market does all the time. Leg, retrace, leg, didn't give another leg. Over here, leg, retrace, leg, retrace, leg, retrace, double top, starts building legs in the other direction. Leg, retrace, leg, deeper retracement, leg, retrace, failure to give a lower low, and boom, now we're building legs in the other direction. Leg, retrace, leg, retrace, leg, retrace. I really did. We don't normally trade the dollar, not in the live trading room, not the concierge trade alerts, not even the one trade a day. Any particular reason why not? Well, we're doing 8 markets, and I mean, that's kind of overkill as it is. But I just thought I saw the setup, and I thought, that's how the tweets really started. I would sit here at night, and I would look at the charts, and I would see these setups, and I was like, man, how can you see that and not share it with people who don't see it? Because I remember what it was like when I couldn't see it. I was doing the radio show. It was financial talk radio. I had been trading equities in the past, and I was trying to make the transition to futures, and I knew that I needed to learn how to trade because in equities I had been trading on a whisper. Boy, that was expensive. Where the friend calls you up, buy this, it's going to the moon tomorrow. So glad I got away from that. But anyway, I knew I needed to learn how to trade. And one of my guests on the show, some call him the stock whisperer, he would talk about, look at this setup, and I would look, and it was like, I don't see a setup. I just see a bunch of candlesticks and it looks all jagged and it makes no sense to me. I saw no method to the madness. I knew I needed to learn. I just couldn't find anybody to teach me. Mike Reed came along, taught me some very valuable things. David came along, taught me how to look at a larger time frame, because my guru had me looking at a very small time frame. And so it took some time. And then Michael and I met and we started trading together. We traded together, struggled together, coded together, put indicators together and systems together, and goodness, now we're in our second decade. Incredible. Absolutely incredible. Okay. Tomorrow, if the dollar continues this decline, now we initially put this trade on, did I put the day? I usually try to do that on, alert published on live radio 11/9. Okay, so tomorrow will be the third day, the 12th. My brother's birthday. Happy birthday. The 13th, my 32nd wedding anniversary. Thank you. So tomorrow or the next day, if the decline continues, that will set the stage for the trade. But remember, it's got to rally up. We're going to buy 98.81 on a stop, given the opportunity. So we'll just be patient and wait. We already did the Dow, already did the Russell. What haven't we done? All right, we did the S&P, the Dow, the Russell. We did crude oil. We did the euro. We haven't done gold. We haven't done bonds. We did soybeans. The bond market closed early today, and so even though I put out some levels, let's take a look. I put out some alerts. Bond, ZBZ. Long above 152.29 did not happen. 151.19. Just no trigger. And this very interesting story in gold continues to unfurl or not unfurl. Look at how many days. This goes back to what, last Friday? We had the huge move down in gold, and then we went flat, and we've been concerned about the patient ever since. No trigger. No trigger. That was our one trade a day, which I think that was a no trigger as well. Yeah. No trigger. I mean, no trigger. The alert that we put out last night, now this won't go on forever. This thing's going to bust out of here. And when it does, look out. Last night, it was long above 96, short below 83. 96 was not touched, and 83. Oh, what do we got here? Swing low. 83.30, 83.20. Yep, that's what I thought. Just want to make sure. So no trigger. No trigger for 1, 2, 3, 4 days. Well, no, Friday. Friday we had a move. Then Sunday night, okay, after the move early Friday morning, the 8:30 a.m. hour when we had the news release. Oh, remember the big job surprise? Now, the jobs, we created 280,000 jobs in the 54 plus age bracket. 54 years old plus. In the quote unquote important age bracket, which is, I forget now, 19 to 54. Something like that. 24 to 54. I don't know. There was an actual loss of jobs. So the important area, we lost jobs. In the unimportant area, we gained 100,000 more than was expected. But nobody talked about that, except the guys over at Zero Hedge. They talked about it. Those are some pretty smart guys. You should check them out. If you don't know who they are, zerohedge.com. They write some very interesting articles. They have some unique takes on the market, and they dig up some good information. So that's one of the sites that I personally enjoy. So that's it, my friends. That is the Concierge Trade Alerts for this Veterans Day, the 11th day of November 2015. And I said it on the radio show, but I want to say it again right here, right now, to each and every man and woman who has faithfully served their country, made sacrifices, put your life on the line, put yourself in harm's way for our freedom. Freedom that I'm so sad to say we too often take for granted. I salute you and I thank you. And if there's ever anything I can do to be of assistance in this crazy business called trading, you give me a call. And I'll see you all in the live trading room. Take care.